July soybeans were sharply lower and are now down 0.5 cent on the week, which is a interesting thought considering that trade wars cooled off significantly over the weekend and into Monday. And also we had a rather friendly USDA report, or at least friendly versus expectations report on Monday. So lots of positive news to start the week, but just in one day, we've taken all of that back and are now slightly lower on the week. We'll see how the week ends tomorrow, but quite the roller coaster ride for the week. We did test our 100-day moving average at 1046.25 in July beans. It got through it by 0.25%, but then had a mediocre bounce off of that. So that will be support going into tomorrow. At least for today, it did hold that 100-day moving average. We had our NOPA crush numbers. They came in higher than analyst expectations at 190.23 million bushels of soybeans crushed by NOPA members last month. The average guess was 184.6. So that is a fairly friendly number. It is a record for the month, and it's up 12% year over year. However, soybean oil stocks came in well above trade guesses, and that sort of compounded some negative news for soybean oil as the EPA mandate that was proposed yesterday afternoon, evening, was quite a bit less than what the trade was expecting, and soybean oil was limit down. So that was probably the main factor weighing on soybeans themselves here today. Weekly export sales were released as they normally are on Thursdays, and they were within expectations at 282,000 metric tons for old crop, or this current marketing year. The expectations were 200 to 500,000, so at the lower end. However, for next marketing year, 25-26, they were 490,000 metric tons, which was at the high end of expectations. The range was 350 to 500. Lots going on with the soybean market here at the moment, both soybean fundamentals and macro fundamentals. So lots to be paying attention to. In the meantime, you stay tuned, you stay safe.